Intel just lost $100 billion overnight. And it's just the beginning. Intel just lost over $100 billion in market value in 48 hours. Not from a crash, not from a scandal, but from a silent policy shift in Beijing. Today, we break down how one Chinese directive flipped a switch and exposed the deepest vulnerabilities in America's tech empire. This isn't just a chip ban, it's a warning shot. One that could redefine the future of global tech leadership. On April 12, 2025, China's Ministry of Industry and Information Technology quietly announced a ban on U.S.-made chips in all government, systems, and state-backed enterprises. Within hours, Intel contracts with China Mobile, State Grid, and Huawei-linked vendors were canceled. By April 14th, Intel's stock dropped 18.3%, erasing over $100 billion in value. This wasn't just about sales. This was the beginning of a long calculated Chinese phase-out of U.S. semiconductors. Intel was vulnerable. 27% of its revenue in 2024 came from China. That's $22 billion. While NVIDIA, AMD, and others diversified, Intel stayed embedded in Chinese telecom and infrastructure. By targeting Intel, China triggered panic across the tech sector. The semiconductor index dropped, ETFs collapsed. But no one got hit harder than Intel. Intel's fall wasn't sudden. In 2011, it controlled 80% of the PC chip market. By late 2024, just 57%. Delayed node transitions, missed innovations, layoffs, and a failed pivot to next-gen chips all made it fragile. Now, Beijing has accelerated what was already a slow collapse. This isn't just about banning chips. China has a roadmap. The Clean Silicon Directive demands all critical systems run on Chinese-designed chips by 2027. That means Intel, AMD, and Micron aren't just losing sales. Their products are being phased out of the world's second-largest tech economy. In 2024, Huawei stunned the world with the Mate 70 Pro, powered by a 5nm chip built domestically by SMIC. No UV machines, no Western tech, just old tools used smartly. And it worked. Huawei sold over 45 million devices in 6 months. China didn't just resist U.S. pressure. It built a new supply chain. And it proved the world doesn't need American chips to thrive. Yes, Intel is receiving $8.5 billion in CHIPS Act grants and $11 billion in loans. But its megafab in Ohio is delayed to late 2026. Meanwhile, TSMC is already producing 3nm chips in Arizona. Samsung is ahead on 2nm. Intel is still trying to fix yield issues. Consumers will feel it next. With China out, Intel will cut output or raise prices. HP and Dell already expect 12 to 17% hikes on new models. Cloud servers, AI tools, logistics software, everything runs on chips. Intel's pain will be passed down. This is bigger than one company. China isn't isolating Intel. It's building a post-American tech stack. Huawei, SMIC, and others are now capturing over 55% of China's government chip contracts. U.S. imports? Down to 28%. Analysts are skeptical. Intel stock underperformed the semiconductor index by 31% in 12 months. Goldman Sachs downgraded it. Execution is lagging. Innovation timelines are slipping. The 18A node be mass deployed until mid-2026. By then, rivals will be 2 generations ahead. Intel may be today's headline, but China has more moves. Export bans on gallium. AI chips and rare earths are coming. And if Washington can't stabilize its own supply chains, it may lose not just companies, but its global tech leadership altogether. Like, share, and subscribe for more in-depth analysis on the global tech war. Is this the beginning of the end for U.S. chip dominance? Comment below. Thanks for watching. Thanks for watching.